Hey everyone, a very warm welcome to yet another interesting episode of the Fisdom Wealthcast. I'm super excited, super stoked. Today with us, we have an extremely special guest, Mr. Neelesh Surana, who is the CIO of Mirae Asset Mutual Fund. Nilesh, a very warm welcome to the Fisdom Wealthcast.
Yeah, hi Nirav. Thanks for inviting me. It's my
So,
pleasure.
नीलेश जी जनरली जब भी हम ये वेल्थकास्ट के एपिसोड करते हैं तब हम हर बार शुरुआत में एक सवाल पूछते हैं which has more to do with the markets, but this time we have another special event that has just passed and that's going to take precedence, and there are a lot many questions around that event that many people have. So on behalf of the people, the first question is going to be budget kya bolta hai. So the budget has been a very interesting one in its own right. Initially it started off as a relatively low decibel one, but then it went on to be more of a less is more kind of a budget where, with not many big bang announcements, but as much ever announcements were made have been really impactful and very critical in a way. So, what is your reading of the budget? What's your take on the budget? And what's the right way for us to perceive the budget?
Sure, you're right. It a very important event happened 2 days back, and I mean, in substance, the budget is I think it ticks most of the boxes. It is supportive of growth via the infrastructure spending, and the backdrop is and the approach is pretty interesting. I think the approach has been a continuation of very reasonable assumptions, a more credible tax regime, if I were to say, which is sort of simple and predictable. So there is a continuation of the previous year approach. And among the other highlights has been the status quo on capital gain tax, which is sort of comforting. Um, Another highlight has been the quality of deficit. So the fiscal deficit quality is good in the sense there is a sharp reduction in the revenue deficit share within the fiscal deficit, which is for next year is all-time sort of low at 48%. So I think given the backdrop of global headwinds, nascent recovery, where we have some soft package of rural sort of recovery, and also a heavy election year, the overall budget has been pretty decent. And as I said, the important thing has been the approach and the framework on both on consistency of taxation, thrust through growth via capital expenditure, less of revenue expenditure, and overall maintaining a delicate balance between urge to spend and stability. So it's a very delicate balance between fiscal support and fiscal stability. I think that's the sort of initial thoughts on sort of budget.
Absolutely right. So, even though it has largely been a very well-rounded budget, काफी appropriate सा budget लगता है, काफी well-rounded socio-economic agenda को ध्यान में रखते हुए, काफी जो key elements है economy के उसको address करते हुए ये budget craft किया गया था. I feel with the budget ticking off so many boxes correctly, like you mentioned. Despite that, we saw quite a mixed reaction from the broader markets during the budget and even through the day of the budget. While initially, the response was quite optimistic and quite positive, but towards the fag end of the budget and through the rest of the day, we saw the markets give up almost all of its gains. Obviously, I understand कि एक दिन का movement से बहुत ज़्यादा फर्क नहीं पड़ता, but have been attempts to try and read into the market movements on the budget day as a reaction as to how is the investor community, how is the analyst community perceiving the budget itself, and we saw quite a mixed bag of reaction. At in the first half, things seemed really elated, काफी खुशी का माहौल था, और खत्म होते होते all the gains were given up and it went into the red. Do you think it had more to do with the budget, or was it that we immediately started shifting focus back to the ongoing Adani saga and the upcoming FOMC meet at that point? What exactly happened? Did the reaction have anything to do with the budget at all?
No, first of all, dissecting market movement, what led to what exact reaction is very difficult in near term. and to that extent, how much is because of budget or non is sort of is very difficult to sort of say. That's first point. Second is, that lot of taxation part is outside of budget. So to that extent,
Right.
I think there's not much sort of excitement in terms of particular sort of sectors. We had some positives on a couple of sectors and maybe negative on insurance and others. Beyond that, market, as I said, movement is also driven by many other factors. There are certain issues which are taking limelight in the media related to a group. I think that also has some sentiment sort of impact apart from global sort of noises. I guess that, as I said, too much of importance should not be given on budget, except that what is the approach and the assumptions and the credibility towards balancing growth, consolidation, etc. So to that extent, it's been a pretty decent sort of budget. Any which ways, the fact that a lot of emphasis is on capex, all that will take a bit of time to percolate.
Right. Right.
And I think purely look at it like this, that no bad news or status quo on capital gain tax, where there was a bit of anxiety pre-budget, is also
Right.
sort of positive. So let me put it like this: if there were something on capital good tax, then the reaction would have been negative. But yeah, I mean, the point is, 1 or 2 days dissecting market only because of an event, when parallelly there are other events happening, as you rightly said, is very difficult to, or it's not right also in investing.
Correct. Correct. Absolutely. Absolutely. I completely concur. I feel that is indeed the right way to view the situation. So, जब आपने बजट की बात की, you also emphasized on the fact कि काफी capex orientation रहा है, काफी growth orientation रहा है, and हमने भी ये notice करा है कि capex की जब भी बात कर रहे थे, finance minister जी जब address कर रहे थे, तब there were a few sectors that actually started cropping up into limelight very evidently. आपके जो मोस्ट कॉमन एंड पॉपुलर सेगमेंट्स थे वो थे रेलवेज, इंफ्रास्ट्रक्चर, लॉजिस्टिक्स, रोड कनेक्टिविटी। ये काफ़ी सेंट्रल थीम थे, बट इसके साथ ही साथ काफ़ी ऐसे छोटे छोटे मैन्युफैक्चरिंग ओरिएंटेड सेक्टर्स थे जिनके बारे में बात की गई थी। सो इन इन अ बजट दैट वाज सो हेविली ओरिएंटेड टुवर्ड्स केपेक्स, I feel that it sets the tone for the Indian economy going ahead. Ki what is the government and the policies focus going to be on? And is there any way we can draw upon these insights? And probably you could throw light on which sectors do you believe will be in the front line or in the first order of benefiting going ahead?
Sure. So, Nira, what happens is, like, to the audience, and I've generally seen that people do get excited in terms of some headlines of the budget, whereas investing is much more complex. So, what is good for a sector could already be built in particular stocks.
Yeah.
So, I would say thrust on the sectors purely on budget sort of lens, but that do not mean necessarily in terms of stock, because there is much more thing. For example, valuations. For example, industrials, there is a indirect or direct thrust, but that doesn't mean that industrials are good stocks, because maybe valuations may already be making it beyond that. But that said, the impact of budget clearly has been more on the capex oriented businesses, industrial, cement, all those sort of businesses, also on consumer discretionary side. And also, see what happens if the layout on capex, which is most of it is construction activity, is so significant, there is a rub-off effect even on the rural economy, because rural economy is not essentially only agriculture. In a typical rural household, there would be someone who is working in a city or urban area in construction work, and that actually was one of the reason of slowdown, because post the second sort of COVID wave, it did impact those activities. So I think there are a lot of ripple effects in terms of multiplier effect of sort of capex. So all that would sort of help. And specifically, apart from capital oriented sort of businesses, intensive businesses, uh, uh, I think only from the lens of markets, what happened in tobacco in terms of a rational taxation, marginal tweaking in increase, is also a bit of comfort, in the sense that there is a larger trend happening in terms of illicit sort of cigarettes, etc. So that was one area which was sort of where the market did react. Another area was related to clubbing certain tax inefficiencies in life insurance. And there we have seen that's on the negative side, but that actually has seen quite a bit of reaction in last 2 days. I think, as you also sort of said, that I think the important thing is to take a very comprehensive and the trying to understand the approach of the budget rather than just linking it to a particular sector or a particular stock.
Absolutely, absolutely. I feel that is indeed the correct perspective. Nilesh, given the way the budget was, क्या कोई ऐसी चीज थी जो probably सरप्राइजिंग रही हो अनाउंसमेंट्स के दौरान, जो probably something that would have led you to probably revisiting, not in entirety, in a very small way also, but would have led you to revisit any एलिमेंट ऑफ एनी ऑफ योर स्ट्रैटेजीज? ऐसे कोई अनाउंसमेंट थे जो आप एक्सपेक्ट नहीं कर रहे थे, और वो न्यूज़ इन्फॉर्मेशन मिलने के बाद आपने it would have led you towards thinking to modifying anything that you're already doing, or was all of it mostly factored in and was very well predicted, or I won't call it predicted, but at least anticipated to a fair
Yeah,
degree?
yeah. No, so I think purely from portfolio sort of perspective, as I mentioned on the let me start with the negative side. So clearly, I don't think people did built in that the tax related incentives or loophole, if I were to use that word, on the life insurance side would be clubbed so fast, and to that extent, that calls for reviewing that. But what happens, Nirav, is like. Sometimes the reactions is so fast and markets are myopic, so because some certain things may impact only the near term, and there will be enough levers with the manufacturers, I'm talking about insurance companies, to tweak in
Hmm.
and overcome some of those external sort of assumptions which have been changed by the budget, right? So to that extent, I'm just talking about the sectors, not necessarily that whether the correction led to some opportunities or not. I think clearly insurance did sort of step. I mean, it's stood out on the negative side. On the positive side, as I said, many corporate sort of capital capex oriented sort of businesses, but that do not necessarily led to any portfolio related actions, because as I said, most of it has been sort of doing well, surprisingly, last 15, 18 months, those stocks. And in some cases, it's already baked in terms of the valuation.
Hmm.
So from our point of view, no major change from purely from portfolio activity point of view, if that is the question,
Yeah.
on account of the budget.
Yeah, yeah. So, since we're talking about the budget and the markets, coincidentally, there is another event that is underway. We all know about the entire debacle that's following the Adani group. So, not specifically just to the group, but do you think that such an event bears heavy on investor sentiments, and especially, the sentiments of foreign investors? There have anyways been talks within the communities that India is actually stepping up on its governance game, and while there's a long way to go, India is making progress on the governance front. And probably, do you think such an event would basically lead to some dented sentiments among foreign investors, especially? Do you think we could expect some amount of selling and outflow as a ripple effect across other stocks as well, along with just the affected group? Or do you think it'll be very isolated and very limited to the group, and the rest of the market will continue to develop as per their fundamental strengths? And also, this is very specifically from the market sensitivity to not just the group, but also to FPI inflows.
Sure. No, I mean, when we make comment on such sort of incident without commenting on the actual sort of topic,
Yeah, I
it's
mean,
like,
not the actual
again,
group. It was
yeah.
more from a
Yeah,
sentimental stand.
so yeah, Nilo, I got it. So it's like, say, at an aggregate level, I don't think it would have sort of any impact whatsoever. The quality of governance and the kind of quality of businesses management we have, and the board practices and how it has progressed over the last a couple of decades is significantly better, both on relative basis and on absolute sort of transition. So I think it should not have at an aggregate level any sort of impact in terms of how corporate India and the companies which we have is some exceptional governance standard in many most of the sort of companies. And that said, any country you pick up, there are always noises, whether it is in China
Yeah.
or US or any other geography you look at, there will always be noises related, right or wrong, related to certain companies or groups. But at an aggregate level, it is definitely, I don't think so. From a longer term perspective, it would have any bearing in terms of, for all you know, it could. I mean, such sort of activity just further gives more ammunition and more sort of ammunition to all the board and the management to make sure that the disclosure, the actual sort of governance practice as further sort of strengthened. So I don't think so. It would have a longer term sort of impact.
Absolutely. So, Nilesh, now that we spoke about the budget and the way the markets are, probably it would be great for you to throw some light on how is Mirae Asset Mutual Fund positioning its portfolios at this point in time going ahead. What are the themes that you're relatively optimistic on as a fund house, and probably if there is any sort of overweight, underweight sort of a semblance that you could share. Just in general, we like to get an idea of the current framework that Mirae Asset Mutual Fund is adopting for its equity investments.
Sure, Nirav. Yeah. So what has happened, Nirav, as you know, that markets have been sort of consolidating. We have done better than other global markets, but last 1 year, 15 months, not gone much. So to that extent, what has happened is there's a lot of divergence. We have seen some growth sort of stocks, price and time correcting, some value moving up. But at an aggregate level, when we see today, I think there are a lot of opportunities across sectors. So barring some sectors where, let's say, IT, where there are certain global headwinds, or metals, or maybe industrials purely on account of valuation, we see literally opportunities across all major sort of sectors. And the preference has been on financials, which is a large portion. It is still reasonably priced. Healthcare, which is very reasonably priced post the severe time price correction. Consumer discretionary subject to valuation. As I said, in certain pockets, we have seen valuation time and price correcting. That is also sort of interesting. And I said, other manufacturing related businesses, be it defense, industrial, again, subject to valuation. In terms of your question of what are the themes which we are looking for or building upon, I think some of the larger themes which are a sort of work in progress or will do well over the next few years is related to the manufacturing theme. And there is massive tailwind of reforms, China supply chain diversification, and that has just started. So anything which is directly or indirectly related to that, we are looking at it. Housing is another theme where we have seen retail sales at a 7 8 year high. It's a long duration sort of cycle. Autos, we are sort of positive, which comes under consumer discretionary purely on account of low base in many of the categories. Rural is another thing which is sort of positive because, again, our view is that over the course of the year, there are multiple forces which will call for improvement compared to what 2 years back was, and base, of course, is slow. Telecom, we are positive ongoing because the painful consolidation is over and there is a pricing power. And overall, the theme, another theme is across sectors, is we are seeing that because of several factors, there is formalization, there is advantage listed companies, there is advantage strong companies, not necessarily listed, but basically strong is a strong sort of companies are getting stronger and weaker ones are getting marginalized. So that is also a theme. So I think the choice, Nirav, is quite widespread. Apart from the three sectors which we are seeing is sort of underweight sort of stance.
Absolutely. So there are quite a number of opportunities, and you seem clearly ready to capitalize on the ones that you're extremely confident of. Which leads me to my next question, Nilesh. As we speak, Mirae Asset Mutual Fund is has launched its own FlexiCap fund. Now, a FlexiCap fund is a really broad mandate. It is almost considered as a staple in any asset management company's bouquet of products, right? It is almost mandatory to have at least one flexi cap fund because of the variety of purposes it solves, right? So I have a twofold question for you around the flexi cap fund. One, why now? I mean, there's no positive or negative undertone to it. The question is simply why now? It wasn't there all this while इतने समय से था नहीं एक flexi cap fund, but now you decided to do it. So is there any thought, anything that we need to know around the timing of the launch of such fund? That's one. और
Sure.
दूसरी बात ये, अगर ये इतना कॉमन कैटेगरी है जो हर एसेट मैनेजमेंट कंपनी के पास है, एंड इट इज बेसिकली इट ऑफर्स यू द फ्लेक्सिबिलिटी टू रियली manage the fund in the way you like. What is it that Mirae Asset Mutual Fund intends to do differently in a way to deliver a very distinguished or distinct value proposition to customers? So that's the twofold question: why now, and what's the distinction?
Sure, sure. So, Nirav, why now? The question is like, I mean, if you look at it, we are completing 15 years of asset management, and we are about 110,000 crores of assets, which spread across primarily five diversified equity schemes, and then we have three hybrid products and three thematics. Now, despite the launch over the course of last 15 years and last 5 years, much more, there were gaps in the portfolio. That is one. So there is no particular reason, but there are gaps in the portfolio because you can't launch everything at some point in time. It has to be graded. Each portfolio, each fund launch is very, very sort of important. So that is the main reason. So we did have gap of flexi cap, or we still have gap of a multi cap or a small cap, which will be filled over the course of the journey. That is one point. Second, as you rightly said, it's a large category. It's 250,000 crore sort of category, and it has certain inherent advantages, which is true to everyone, which is the flexibility. Both flexibility is primarily on account of being agnostic in terms of the buckets, whether it is large cap, mid cap, small cap, and second is on terms of the sectoral sort of flexibility. So that's the answer to your first sort of question. What could be different? Actually, at the end of the day, it will be over time only in terms of risk-adjusted performance over the benchmark and peers is an end product. So we can't say what could be sort of different because that's the end metrics which any fund has to win on the merit of it case over a period of time. I would say a few things. First is the fact that the benchmark is the top 500 companies, which has about 80% in large caps and 20% in small and mid caps. What we have observed over the last, let's say, 10-year rolling return at any point in time, that mid caps generally gives superior returns in excess of about 200 basis point over a period of time. But that always do not come sort of together. There are always phases where, let's say, when the economy is passing through a tough time or interest rates are high, typically mid and small caps don't do as well. And also it's a function of valuation. So with the long-term average, the differential is large compared to long-term average, as is the case now. Mid caps are slightly expensive and large caps are sort of cheap. That is sort of one point which gives flexibility to alter the allocation of large, mid, and small sort of space. And for example, small caps today is much appearing sort of cheaper compared to the mid cap, and mid cap is appearing slightly expensive to the large cap. So the point I'm saying is the difference will be first over a period of time. We will have higher allocation to mid caps, which is small and mid caps, which is 20% in the benchmark. And the fund manager, which is Karkera, they intend to probably keep another 10-15% higher on that. But that is a function of what space is cheap, and also a function at the end of the day, particularly in case of mid cap, it's extremely sort of bottom up sort of analysis in terms of what stocks come in the portfolio. The third point I would like to highlight is obviously we are starting for this product on a small base. And so when we say flexi cap, the agility is also a function of size. So our base is much sort of smaller compared to peers. And to that extent, there is some size advantage. And lastly, I would say is the fund is managed. The fund manager is Mr. Rajesh Kasera, and he's been managing our healthcare product and the hybrid products. Healthcare product will be has completed 4.5 years. Will be completing 5 years. So obviously, the advisors are sort of would request them to see his since 5 year track record on that. I think these four are the sort of whatever I will not say differentiation, but these are a proposition. And lastly, Nirav is, I would like to sort of highlight that for our Mirae Asset FlexiCap Fund, the investment template, the house template is same on stock selection and on portfolio sort of construction. Very quickly to recap, the stock selection framework is same, that you buy good quality with a high growth and good return on capital employed business, decent management, and with which is high in thought leadership, and with a decent margin of safety. So that's on the stock selection side. And portfolio for all our existing products, including the flexi cap, is a well diversified sort of portfolio, which is across sectors where we don't take significant active share on sector basis, and that diversification is very important because the portfolio should also sort of able to handle some mistakes, be it coming from external assumptions or internal assumptions. So I think that would be the framework, house framework for stock selection and portfolio construction would be similar to our existing funds, some of which are completing 15 years, one of which is completing 15 years. And within that, there is enough leeway for the fund managers to pick and choose. So I think that's sort of summarizes the approach on the FlexiCap fund.
I feel you left us more excited to see what does the fund come up with. A very important point that you made was that the template is going to remain constant with the fund house and its other funds. I feel Mirae Asset has launched and very successfully managed a couple of flagship funds that remain exemplary in terms of risk-adjusted performance over a longer period. So we are really excited and looking forward to see Uh, the brilliance that Mirae Asset will once again bring to the table with its FlexiCap fund. So, Nilesh, a couple of so we are flooded with quite a number of questions, but I'll just pick a couple of them, considering the time that we have in hand. So, the first question is, sir, do you think that debt funds could be a better choice compared to equity funds, at least for calendar year 2023, considering the volatility in equity markets and return generating capability that funds have? So any comments on that?
Yeah, so I would not come to the conclusion that they'll be a better choice, but yeah, debt on its own have become superior compared to what they were 1.5, 2 years back. So, but the hygiene of asset allocation and the fact that equities do generate superior risk-adjusted return in a growth market like India, where we are talking of very strong nominal GDP growth. We are talking of economy doubling in 6.5, 7 years, and strong pillars to that. And what better way to participate in growth through equities? So and equities are a longer term sort of asset class. So it will be not right to say that 2023 equities may not do well. It's very difficult to forecast. So I think it goes back to the basics, hygiene in the discipline of asset allocation. There is a room for equities. There is definitely room for debt now compared to where the yields are. And debt is actually interesting both from accrual point of view and also duration products, because you see inflation, interest rates some point in time sort of peaking out. But I don't think that's at an expense of sort of equities. Equities will deliver superior returns just like they have done over the last few decades. And India is looking very sort of India in balance sheet, the reforms, multiple things are lot of looking good. So I would refrain from saying that one should uh, take out money from equities and put in debt. Both have the space depending on asset allocation profile, which you guys are sort of experts.
So, to whoever asked the question, it's not as much a question of if or, it is a question of how much and how much, depending on the target asset allocation. Uh, back to basics. I feel Nilesh pointed it out absolutely correctly. So, Nilesh, one final question. It is slightly tangential, but no, an interesting one nonetheless. The person who's asked the question is seeking your views on whether passive ELSS funds are going to be better than active ELSS funds.
So you are asking a fund manager who is an active ELSS fund manager. So
Yeah.
probably that answers my this question. Yeah. So I do believe that active uh, fund management has a role to play in India for significantly long period of time for multiple reasons. We see divergence across within the sector, across sectors, any period of time. So that shows market sort of inefficiencies are sort of there. Also, the shareholding structure is very different compared to other global developed markets. So, you see, there is a room for both active and passive because it depends on what sort of investor profile it is. And because in India, index also make a lot of money. You see, Sensex is up 600 times in last 42 years. So the point is, active is should beat that by few percentage points, 1 or 2 percentage points. But in a growing economy, even passive sort of makes sort of a proposition because that also sort of generate good absolute return. So I don't know whether it answers the question, but if you ask only between the two, my answer will obviously be active.
I feel that very clearly answers the question. So, so to whoever asked the question, there is a place and there's a reason for both of these styles to exist. But if you have to look at it from an outward perspective, from a country economy market perspective, there's probably a longer time to go before passive starts getting mainstream, at least across the board. It could be great in certain allocations, but it couldn't. I mean, there's some time before it becomes the only product that you will ever need in your portfolio. So, Nilesh, I feel this has been a wonderful conversation, a super insightful one. There's so much that I have learned today, and I'm sure that our viewers also have. So, thanks a lot for sparing the time and also sharing such insights and valuable perspectives on such a wide array of topics. Thanks a lot for that.
Thanks, Nirav. Thanks for inviting me. Thank you very much.
Thank you, Nilesh. Good day.